All right, so today we're taking a deep dive into Swiggy.
Swiggy.
And we're not talking about, what to have for dinner. We're going deeper than that.
Yeah,
We're talking about their upcoming IPO.
much more exciting than dinner.
Way more exciting than just ordering some food.
Ah.
But what's interesting about this deep dive, we're using Swiggy's own RHP and DRHP, the documents that they filed for their IPO.
Yeah, these are really interesting. This is like getting a company's diary
Right.
and getting to see all the details
Yeah.
that most people don't get to see until after they go public.
So it's like a sneak peek behind the curtain
Exactly.
of how this company actually makes money, how they spend their money, and what their big plans are
Yeah.
for the future.
These documents have so many fascinating insights. Like, for example, I think most people think of Swiggy as just a food delivery app, but they're actually a lot more diverse than that.
Oh, really? I'll admit I'm guilty of only opening the app when I need some biryani. Well, prepare to be surprised. They definitely focus on food delivery. That's their core business. But the DRHP reveals they've got a lot of other things going on.
Okay, lay it on me. Besides food delivery, what else is cooking at Swiggy?
Well, first there's Instamart. That's their grocery delivery service. This is a huge market right now. It's really booming, and Swiggy's betting big on it.
Makes sense. I mean, who doesn't love the idea of, groceries magically appearing at your door?
Yeah, convenience is king these days, and Swiggy's definitely playing into that. But it's not just food and groceries. They've also got a segment that they're calling Platform Innovations.
Platform innovations. Sounds kind of mysterious. What is that exactly?
It is a bit of a catch-all,
Yeah.
but it seems to include new ventures and experiments. Think of it as Swiggy's testing ground for the next big thing.
So they're not content with just being the king of the food delivery market.
Yeah.
They want to be like the everything app, like an Indian Amazon. That's a great question, and it's one that a lot of analysts are asking. The DRHP doesn't really give us all the answers, but it does offer some clues. Like, for instance, in fiscal 2023, Swiggy started generating revenue from an out-of-home consumption business.
Out-of-home consumption? What does that even mean?
It's not entirely clear from the filings, but it suggests that they're moving beyond just delivery. They might be doing things related to dining out or entertainment or other experiences.
Okay, so they're trying to capture not just our stomachs, but our entire wallets. But the question is, are they making any money?
That is the million-dollar question.
Yeah.
So let's take a look at the financials. The good news is their revenue growth has been impressive. It's actually growing a lot faster than the overall food delivery market, which suggests that they're gaining market share.
Okay, that's a good sign, right?
It is definitely a good sign. But here's the catch. They're still operating at a loss. In fact, their losses have been increasing as they invest heavily in growth.
So they're spending a lot of money to
Yeah.
fuel this expansion, which makes sense. But it's also kind of risky.
Yeah, it's definitely risky. It's kind of like they're building this rocket ship to the moon, but it takes a lot of fuel to get there. And investors are betting that the payoff will be huge, but there's no guarantee.
High stakes game. So what are some of their major costs as they're, trying to grow this business?
Well, one of the biggest ones is payments to their delivery partners. They have this massive network of drivers all over zipping around, getting food to people, and those costs add up really quickly.
Yep. And it's not just delivery costs, right? They're spending money on all those discounts and promotions we see all the time.
Absolutely. They're in this constant battle for customers with Zomato, their biggest competitor. And that means offering discounts to attract new users and keep the existing ones happy.
Speaking of Zomato,
Yeah.
how does Swiggy stack up against the competition?
It's a fierce rivalry. The DRHP actually highlights this as a major factor in Swiggy's future success.
I can imagine they're constantly trying to
Yeah.
innovate and outdo each other.
Exactly. And it's not just about the price. It's about delivery speed, restaurant selection, and just the overall user experience.
It's like a big game of chess,
Yeah.
with each move carefully calculated. But while they're battling it out in the food delivery arena, they're also expanding into other areas like grocery delivery with Instamart.
Right. And this is where things get really interesting. Swiggy is betting that they can leverage their existing infrastructure and their customer base to become a major player in the grocery delivery market.
It's a smart strategy. They already have the delivery network in place. They have the technology.
Exactly. And they're emphasizing speed and convenience, which are key in the grocery delivery world. They're promising deliveries in as little as 15 minutes in some areas.
Wow, 15 minutes. That's almost as fast as ordering a pizza. But is grocery delivery any more profitable than food delivery?
That's a great question, and it's one that a lot of investors are asking. The margins in grocery delivery are really thin, and the competition is fierce. It's a tough nut to crack.
So not a guaranteed win.
Not at all. It's a risky bet, but one that Swiggy seems willing to take. They're hoping that they can use their scale, their technology, and their brand recognition to give them an edge. But only time will tell if they can make it work financially.
It's a fascinating challenge, trying to disrupt a market that's already being disrupted.
Yeah.
But let's not forget about the regulatory hurdles. We talked about data privacy earlier. Are there other legal challenges that they have to navigate?
Oh, yeah, plenty. The legal and regulatory landscape is a minefield for a company like Swiggy. They're dealing with everything from food safety regulations to competition law scrutiny.
It sounds like they need an army of lawyers.
Probably. And these legal battles can be really costly and time-consuming, which could impact their growth.
It's a reminder that even the most innovative and ambitious companies can't escape the realities of regulation.
Exactly. And that's one of the key risks that investors will have to consider before buying into Swiggy's IPO.
Okay, so we've got a company that's much more than just food delivery. They're aiming to become like a one-stop shop for anything food-related, expanding into new markets, investing heavily in technology. But they're also facing intense competition. They're operating at a loss, and they're navigating this complex web of regulations.
It's a lot to digest, and we're just scratching the surface here. We haven't even touched on their customer metrics or their growth plans and the potential impact of the IPO.
Well, let's keep digging. I'm eager to see what else we can uncover in these documents.
Yep.
Let's take a look.
Let's do it.
So we talked about Swiggy's different ways of making money and their big plans for the future and the competition they're dealing with. But let's go back to their financials for a minute. I'm still kind of curious about the specifics. Can we dig into those numbers a bit more?
Absolutely. Let's crunch some numbers. So for the 3 months ending June 30, 2024, Swiggy's revenue was over 32 billion rupees. That's actually more than they made in the whole fiscal year of 2022.
Whoa, that's a huge jump. Sounds like their revenue's going through the roof.
Yeah, their growth is really impressive. But like we said before, they are still operating at a loss. For that same time period, their losses were more than 6 billion rupees.
Okay, so the losses are big, but their revenue is going way up. It's like the classic growth versus profitability problem.
Exactly. It's a tough balancing act. Swiggy is really focused on growing fast, even if it means not making a profit right now. They're putting a lot of money into expanding their business, getting new customers, and improving their technology.
Yeah, it's like they're planting seeds for a big harvest later on.
Speaking of investments, what about their cash flow? I always hear that's really important for a company's financial health.
You're right. Cash flow is like the lifeblood of any business. And this is where things get a little complicated for Swiggy. For those 3 months ending June 30, 2024, they actually used over 2 billion rupees in cash for their operations. That means they spent more cash running the business than they brought in.
So they're spending a lot of money just to keep things running. Exactly. But that's not unusual for companies that are growing really fast, especially in the tech world. They put a lot of money into expanding research marketing, and that can lead to negative cash flow for a while.
So it's like they're building a spaceship. And spaceships are expensive, but they're hoping that once it's built, it'll take them to a whole galaxy of profits.
Yeah, that's a good way to put it. The question for investors is, can they keep spending at this rate without running out of money before they start making a profit?
It's a bit of a nail-biter. So what are they doing to manage these costs and try to turn things around?
Well, one of their main strategies is to get users more engaged and loyal. They're using data and technology to give customers a more personalized experience, offer targeted promotions, and deliver food faster.
That makes sense. Happy customers order more, right? And more orders mean more revenue.
Exactly. They're also really pushing their Swiggy One membership program to encourage people to order more often and become loyal customers.
I've seen the ads for that.
Yeah.
What exactly is Swiggy One?
It's basically a subscription. You get free delivery discounts and even perks on other services like Dine Out.
Dine Out. Didn't Swiggy buy them a while back?
Yeah, they did back in 2022. It was a way to expand beyond just delivery and get into the dining out market.
So they're trying to be more than just a delivery app. They want to be the go-to platform for everything food-related, whether you're eating at home or going out.
Exactly. They're building like a whole food ecosystem. And a key part of that is keeping customers coming back. Swiggy's actually doing pretty well on that front. The DRHP says that customers they got in 2021 were placing more than 5 orders per month on average in 2024.
5 orders a month. That's a lot. I guess those discounts and loyalty programs are working.
It seems like it. Of course, we don't know Zomato's numbers, so it's hard to compare directly. But it's clear Swiggy wants to be the platform that people keep using.
Like the Hotel California of food apps. You can check out anytime you like, but you can never leave.
Well, hopefully not that extreme. But yeah, they want to be an essential part of people's lives.
Okay, so they're doing well, keeping customers. But let's talk about their growth plans, especially expanding into grocery delivery with Instamart. We touched on this before, but I want to hear more about their strategy.
Yeah, that's definitely a big focus for them. The DRHP highlights Instamart as a major driver for their growth. They're putting a lot of money into making it bigger, expanding their selection, and as we said before, making it faster and more convenient.
That makes sense. Grocery delivery has really taken off in recent years, but it's also a really competitive market.
Absolutely. Swiggy's up against established players like Big Basket and Grofers, and newer ones like Amazon Fresh and Flipkart Quick. It's a real battle out there.
So what makes them think they can win?
They believe they have some advantages. First, they can use their existing delivery network and technology. They already have a huge number of delivery people and a sophisticated system for handling orders and deliveries.
So they don't have to start from zero?
Exactly. Second, they have a strong brand and a lot of loyal customers. People already trust Swiggy for food delivery, so they're more likely to try Instamart for their groceries.
It's like one good thing leads to another.
Exactly. And third, they're focusing on speed and convenience, which are really important for grocery delivery. They're promising deliver in some areas in as little as 15 minutes, which is a big selling point for busy people.
15 minutes. That's faster than I can go to the store and back sometimes.
Yeah.
But is grocery delivery actually more profitable than food delivery?
That's the big question. The margins in grocery delivery are known to be pretty thin, and there's a lot of competition. It's a tough business to make money in.
So it's not a sure thing for Swiggy.
Not at all. It's a risky move, but one they seem ready to take. They're hoping that their size, their technology, and their brand will give them an advantage, but we'll have to wait and see if they can make it work financially.
It's a fascinating challenge,
Right.
trying to disrupt a market that's already being disrupted. But let's not forget about that other big issue, the regulatory hurdles they face. We talked about data privacy and labor issues, but there's another thing we need to consider.
Yeah, you mentioned that legal challenge. What was that all about?
Right.
The DRHP mentions a legal complaint from back in 2019. It alleged that Swiggy was operating without the right licenses in some areas. This highlights a key risk for investors: regulatory uncertainty.
So even if Swiggy has a great business model and a good growth strategy, they could still run into problems with laws and regulations.
Exactly. And this case is just one example. The legal and regulatory landscape in India is complicated and always changing.
Sounds like they need to be really careful or make sure they're following all the rules. But even besides legal challenges, they also have to deal with the fact that the market is constantly evolving.
Absolutely. India's food tech industry is still pretty young, and there's a lot of uncertainty about what will happen in the future.
It's like they're sailing in uncharted waters.
That's a good analogy. They need to be prepared for storms and rough seas along the way. But all that said, I'm still impressed by their ambition and their willingness to take risks.
Me too. They're not afraid to dream big and go for it.
And in a market like India, that can be a real strength.
Yeah, it's definitely a story worth watching. But let's zoom out for a second and think about what this means for like the average person. You know, if someone's thinking about investing in Swiggy's IPO, what are the big things you should keep in mind?
Well, I'm not giving financial advice or anything, but I can offer some food for thought.
I like what you did there.
Uh,
Was that intentional?
Maybe. But seriously, investing in any IPO is a big decision, especially one like Swiggy's. There's a lot of potential, but also a lot of risk.
Right. We've talked about the tough competition, the regulations, and the fact that they're not making a profit yet.
Exactly. Those are all things to consider. Investors need to weigh the risks against the potential rewards. Swiggy has a lot of good things going for it: a strong brand, loyal customers, impressive growth, and a talented team.
But they are spending a lot of money. And there's no guarantee they'll be profitable anytime soon.
It's definitely a gamble. But it's a gamble on a company that wants to change. Not just food delivery, but the whole food scene in India.
That's a big vision.
Yeah.
And it's not just about India, right? We talked about them maybe expanding to other countries.
Right. Their ambitions go beyond India. They're looking at places like Southeast Asia and the Middle East, where online food delivery and other convenience services are becoming more popular.
So if they're successful, this could be a global story.
Exactly. And that's what makes this IPO so interesting. It's not just about investing in a company. It's about investing in the future of food tech, not just in India, but maybe around the world.
It's exciting, but also a bit scary. How do you even figure out how to evaluate a company with such big and complicated plans?
It's not easy, but that's why these deep dives are helpful. By looking closely at their RHP and DRHP, we can get a better understanding of how their business works, how they're doing financially, and what their long-term strategy is.
We're giving our listeners the information they need to make smart decisions, whether they want to invest in Swiggy or just learn more about the food tech world.
Right? Knowledge is power, especially in the business world, which is always changing.
Well said. So as we wrap up this deep dive, what's your final thought on Swiggy's IPO?
It's a high-risk, high-reward situation, but it's also a really interesting example of how technology is changing the way we eat, shop, and live.
It's a story that's still being written. Whether you're thinking about investing or just love food, or just curious about where technology is going, it's a story worth paying attention to.
I agree. Swiggy's journey is a reflection of India's growing tech industry, its exciting consumer market, and its huge potential.
And with that, we'll leave our listeners with this. Swiggy's IPO is a bet on the future. Will their vision of a smooth, tech-driven food world become real? Only time will tell. But one thing's for sure, it's going to be an interesting ride.